If things are looking bright for US, you expect the USD to strengthen against other currencies, for example. But along the way, you realize that when the data comes out, right, shorter term trading, actually the fundamentals don't really play out that quickly. Then you have to switch towards more like technical trading to capitalize on like trading opportunities in the shorter term.
So sometimes, economic data when they are released, sometimes people will ask like, how come, it's a good data, but maybe stock price can fall.
Yeah,
or
exactly.
it's a very strong data. How come the USD can reverse in that sense? So I think a lot of it also can be pegged towards what market are expecting. Also, I think markets will be forward-looking. So no doubt, even when the data is released, they'll be comparing it sort of with the market expectations. Hi everyone, welcome to this episode of Check the Charts with IG, the podcast where we explore trading strategies, risk management techniques, and market insights to help you trade smarter. I hope you all had a wonderful break and a prosperous start to the year following Chinese New Year. As we settle back into the markets, it's the perfect time to start from the basics and discuss the journey of a trader from idea generation to managing risk and emotions. I'm Jun Rong, market strategist at IG, and I will be your host today. And joining me today are Shallum and Alvin. Welcome Shallum and Alvin. They have worked closely with traders every single day and will share some real-world insights on risk management strategies, trading psychology, and how IG's platform tools help traders make smarter decisions. Now, as a trader, I think one of the questions that new traders have is whether, how actually can they get started? How do they actually formulate a trade ideas, a trading strategy in that sense? So Shallum, what kind of trader will you say you are, and how do you actually find ideas to get into a trade?
Myself, I actually started with day trading, and then during that time also I tried scalping, but that wasn't very suitable because there's too much trades, too much time taken on it. So I developed my trading style from day trader to more swing and position. And your question on how I actually find my trades. So it depends. So there are many strategies out there in the market, but like for me, if I want to keep it simple, what I would do is that I would just look at stocks for the start. And then I'll look at what are the big stocks, like for example, Nvidia, Facebook, Google, okay. And what happens from there is that I will just see whether there is a trend and also a support resistance level. And then I'll just trade based on technicals in a way.
So you'll be more of a trend trader, following the trend?
Yeah, more a trend trader.
Yeah, I think many new traders generally they start off with stocks. Like you mentioned, Nvidia, Google, because in a way, they see it everywhere, right?
Yep.
I mean, they are more familiar with stocks. Apple, maybe they are using iPhone, or like Singapore context, DBS, OCBC. So generally, maybe they will start with stocks, and then if they feel that they are more comfortable, then they start to expand more to maybe Forex, commodities. Do you all see this trend with your clients?
Actually, personally, I started with Forex first because of the higher leverage. Stocks to me back then was more like investment, right? So stocks is for investing, then trading-wise, you want to find an instrument that has slightly higher leverage. So for me, it was indices and FX. Yeah.
So you started with FX?
I started FX first, yeah.
Okay. So how do you find trade ideas in FX? Because for example, in stocks, you can do like maybe some kind of fundamental analysis. There's a valuation sort of to it. There's a growth prospect, but in terms of FX is more of macro.
It's more macro yeah. So I think over the years you also learn like what works and what doesn't work for different time frames, right? So at the start when I first started learning Forex, it was like seeing news in the market, like data release, what's happening in central banks and the country in general. And then from there try to follow the trend. If things are looking bright for US, you expect the USD to strengthen against other currencies, for example. But along the way you realize that when the data comes out, right, shorter term trading, actually the fundamentals don't really play out that quickly. Then you have to switch towards more like technical trading to capitalize on like trading opportunities in the shorter term. Yeah. So I think it depends on your style of trades. If you are more medium term to longer term trader, right, all the fundamentals will be more important to your trading decision, your thesis. Yeah. But for like daily trades, weekly trades, more short term one, right, the technical aspect of trading is more important. They will separate a good and a bad trader.
So you mentioned about economic data. So sometimes, economic data when they are released, sometimes people will ask like, how come, it's a good data, but, maybe stock price can fall.
Yeah,
Or,
exactly.
it's a very strong data. How come,
Right.
the USD can reverse in that sense? Yeah. So I think a lot of it also can be pegged towards what market are expecting also. I think markets will be forward-looking. So no doubt, even when the data is released, they will be comparing it sort of with the market expectation. So I think I'm somewhat very close to two of you in terms of trading style. But for me, I'll go towards more of the macro kind of picture, as you mentioned, just to formulate some sort of a view and then use the technicals to gauge the trend, the entry level, the exit level.
Yep.
Yes. So I think in terms of economic data, in terms of the macro side of things, what I usually do is, for example, some of the more important numbers that I see, for example, in terms of corporate earnings expectations, to gauge where the stock market can go. Because generally in the medium term, as long as your corporate earnings are strong, it tends to lead the stock market performance over the medium term. But of course, in the near term, there will be a lot of near-term volatility in that sense, or some of the indicator that we can look out for example, in terms of the US market, maybe the consumer sentiments, because just based on the past 50 years, for example, whenever there's a recessionary kind of a risk, the consumer sentiments tends to dip first. So generally, these are some of the indicators that you can look at to formulate some of the broader strategy in terms of the market, and then use your technicals to get some of the entry levels.
So I think IG has some like market data and market insight section on the platform that allows traders to see like real-time updates on what's happening for news releases, as well as company earnings reports, updates on their performance, those kind, under news and analysis section on the platform itself.
Yeah, apart from that, I think we also have an economic calendar on the website where it's updated quite timely. So whenever the economic data is being released, clients can go there and check out the latest data. And thereafter, you could see that markets will have reacted to that.
Yep. And the good thing is there's a notification on your phone that tells you the data release real time as it comes out.
Yes.
Yeah.
In terms of market content, I think we do have a section called Trade Ideas. So every day, analysts will come up with some form of content, trading ideas, and it will be posted onto the website. And clients can actually have a very short read. It should take maybe 5 to 10 minutes. Thereafter, they can try to understand what's happening in the markets. So it's kind of a very quick snapshot. And of course, we have weekly webinars to bring clients through some of the latest market developments for that week, and also some of the, of course, entry technicals, those kind of stuff. So that will happen, every Wednesday, and we actually call it the Market Scoop.
At IG, we know that timing and precision are everything in trading. That's why our platform is simple to use, fast, and packed with tools to help you trade. Whether you're trading indices, Forex, or other markets, IG gives you the flexibility to act when it matters most. Opening an account is quick and straightforward. Start trading today at IG.com.
Yeah. So now we have talked about how traders can actually formulate their own trade ideas. I think one of the aspects which is very crucial in terms of surviving in the trading scene is of course also risk management, because you can look at the profits, but of course you have to manage your risk well, such that you wouldn't want a single trade to actually wipe out all of the profits that you get. So Shallum, do you have any risk management techniques that you want to share with the audience?
Okay, so I do practice risk management as well, because they always say you manage your risk, your profits will come. So there's this saying. So in terms of risk management, there are many ways actually. So it depends on your personal profile, depends what sort of trade you're taking and what kind of positions that you're taking in the market as well. So like for myself, if I based on the rules that is set in the for the general, right, is the 1%, 2% rule.
Yeah.
So you base on your capital amount, then you base on 1% of your capital amount, that is what you take per trade. But again, whether that works for you, it is still a matter of you finding out about yourself first. So end of the day, when it comes to trading, it's about how you last that journey throughout. Yeah, so whether your funds will be be available at the opportunity for you to take next time. So how do you preserve your funds? That is very important. So find out a way on how you can last this amount of money throughout your trading journey.
It's a marathon, not a race.
Yes, correct.
Yeah, you mentioned about the 1-2%. Of course, that's the general rule of thumb, right? But of course, if for new traders who are starting out with like 10,000, 1-2% is like $100, $200.
Yeah.
I mean, the trading costs will have killed your capital. So in that sense, we got to probably adjust a little bit. But of course, limiting it to a small percentage, I think that should be the general takeaway. Of course, whether it's 1-2% or you can even push it up to 5%, I think it's still fine for me. Yeah, because I think the rationale is like, for example, you have a trading portfolio of $1,000. If you are down 20%, okay, if you are down 20%, your 1,000 becomes $800. In order to sort of break even and go back to that $1,000, your portfolio now actually have to increase by 25%. Okay, but if you do not control and you do not limit your losses, if your portfolio from 1,000 it drops 50%, so now it's $500. In order to get back to that 1,000, you actually need actually need it to double, which it can be quite tough. So that's the rationale of why we will hope to limit the losses, is to cut losses fairly quickly and short, as long as your thesis is proved to be wrong in that sense. Yeah. So have you observed, maybe I'll start with you, Alvin. Have you observed any clients who has sort of mismanaged their risk management strategy, and from there how can they actually sort of turn around and improve in that sense?
I think most traders, sometimes when they start off, they overlook using like stop loss levels on their trades, right? I mean, these days technology is quite good, whereby, not say technology, like brokers offer a lot of features on the platform that helps traders to manage their risk. So the most basic one will be a stop loss function on the platform for you to manage how much is the max loss and risk on that trade. And then brokers like IG also take it one step further, whereby you can put a guaranteed stop loss to make sure that no matter how the market fluctuates, how volatile it is, your loss is is guaranteed to be only that amount. Won't be anything more than that. Yeah. So many features out there, but most common one will be the stop loss levels that clients use to manage their risk when trading.
Shallum, have you observed your clients, is there a more recommended risk management strategy that they adopt, and from there they sort of are able to secure the profits?
Okay, so the thing is that don't over leverage on your account. Don't over trade on your account. Don't risk something that you cannot sleep on. So basically, just make sure that whatever trade that you're going to take on, be able to accept that risk. So a lot of times, right, our clients tend to lose a lot of money because they went to trade too big.
Yeah.
Like for example, a $10,000 account. Instead of maybe using $100 as risk, they went to use $5,000. Now, of course, one trade loss, right, is half the account gone, which is a bad thing. So if you are in that kind of situation, then you need to reconsider your positioning again. And if let's say it requires you to stop trading and rethink, then just stop trading and rethink.
Like, it's not recommended to just all in and then
definitely not.
leaving it to chance. Because there's always the risk that your thesis could potentially sort of turn sour in that sense.
Okay, like trader's mindset, trader psychology for me is more of a person's like relationship with money, right? People tend to view losses with more optimism, and then profits with more pessimism.